Add value to South African mineral exports through beneficiation has been called into question. Emerging market expert Martyn Davies says having natural resources in the ground confers zero benefit. While it's a natural bonus, he argues that investment in people's skills is the ingredient that helps trigger economic growth. Based on current trends, Davies says it will take South Africa 50 years to double its GDP. The local economy grew at 1.4% last year and is expected to grow shy of 2% this year.
Time to think out of the box to lift South Africa out of its stagnant growth reality. Davies points to countries like Singapore and South Korea, which have no natural resource endowment, that are now leading economies in the world. He says South Africa needs to take a leaf out of their book.
I don't believe that resources confer an economic comparative advantage in economies. Economies succeed because of talent, entrepreneurship, wealth creation, and ultimately people. The most important resource, and anyone, I'm sure, will agree with me, everyone will agree with me on this point, the most important resource a country or society has is its people.
Davies says Africa as a whole has got to work on diversifying its economy. Relying on the export of commodities alone has already proven negative for commodity-driven economies in the region, especially with China's slowing growth.
China's rebalancing from an investment-driven economy, very resource-intensive, to a more consumer-driven economy. In the same way that China's changing and will permanently change, so these economies I mentioned, these resource economies, also need to rebalance. Let's move away from a resource model that's so 20, 30 years old.
The issue of government creating an enabling environment for business to thrive in was highlighted as a major driver to economic success, with an emphasis on a lower cost of doing business, which in turn would assist in boosting job creation. Nampumelo Siziba, SABC News, Johannesburg.